There he is.
Check, 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 check.
Hey, check, check, check.
Thanks, Kristen.
You're welcome. I wish I could be there. Sorry, Brian.
Nice speaking. Whenever they're ready, I'm okay.
Thank you. If you need anything, just let me know.
Good. I'm very easy to, and I've done this a lot. How do I know they can hear me?
We can hear you. Hey, Brian, it's Kristen.
Hey, Kristen, thanks for coming after
Hi.
inviting me here.
You believe me, you don't want me there. I have COVID. You do not want me there, but I'm
Ah.
here in Zoom.
Okay, cool. Excellent.
Thank you so much for doing this for us.
Sure. You know how I like to talk.
I know, but you always have such good things to say.
Yeah, I hope so. Most of them are about me, though.
You'll be all right.
That's fine. Are you guys ready for me? Or are they still out there? Actually, it's shorter. I've had it down to here. It's good though. No, I'm identifying as a man my age that has hair. So I grow it longer just to slap it in people with no hair's face, or than I am around here before I insult them. No, not really. Cool, right? You know.
Did you put that?
No, I have it in my pocket. I would never lose that, Maria. Not at all. Well, I noticed the 7th I have to go to one of my friend's mother's birthday party. She's 90. I don't believe you. Really? So is my daddy-o. You guys ready? Cool. I'm sure some of you know me, right? I know you've heard about me. It's Stroudsburg, man. So, wow, really? I do have 2 kids. Okay, so just a little bit about me for the ones that don't know me. I own an accounting firm called Stone Boylan and Associates. I'm a 2nd-generation accounting firm person. My father was Donald Stone, CPA, Stone Cyphers, McCoy, D'Angelo, and well, not McCoy, he left, and Hornberger. When I was 15 years old, my father threw me into the basement with an IBM Systems 3, and I started running payrolls back then because he wrote software for payrolls, grade reporting, and bus stuff. Then I went to Temple University. I have a bachelor's in business administration and accounting. I've been to NYU for corporate financing and Lehigh University for numerous accounting things. I also taught real estate broker classes. I have over the years, first for Barbara Samet, then for PMAR. And if you ever went to the annual meeting, I was on the panel one year or something like that. So I've been doing this for a long time. We were a client referral only firm, but because so many accounting firms are selling and retiring, we're going to blast ourselves up to open the doors again to the common folk. Sorry. And although if you do take a seminar of mine or I teach, you're always allowed in. If you do come in, you have to say that you were at this seminar to get it going, to get to me. The other accountants, you can get in anyway. So I didn't bring a lot of cards. So write this down, 570. And I'll say it. All right, if you ask a hard question, my answer will be 570-424-4900. Just say no, because I can only give out so much free advice. I'm not there. 570-424-4900. If you spend a lot of money there, you get my cell number. Maria has it. And then my email is stonecpa@stoneboylan.com. boylan.com. I could actually write it down, but I prefer watching you guys actually think. Keeps you awake. All right. So Kristen sent me a little thing about the stuff that you may want to hear about.
Yep.
So I'm going to go with this. First one was, why do realtors need accountants? Do you really want me to answer that?
Yes, please.
Wow. Who asked you? Where are you? No.
I'm listening. I'm watching. I can see it
Okay.
all.
So honestly, the tax law over the years has become so complex. I would recommend you go to an accountant. I would also recommend you would go to a CPA firm. A lot of the tax prep companies and the H&R Blocks, they just do, you hand them stuff, they put it on the right line, and they move on. With me, initially, when you come in, we do a whole conversation with you about what you should be doing. A lot of it you're here, and all the things that you can be doing. And we help you create wealth over a long period of time, from rentals to different types of entities, to different types of structures for your entities and things like that. All right. That's why you should. We cost more, but I can prove to you that I can get more money back when you bring in your old tax return to more than cover my fee. Because when I look at a tax return prepared by someone else, except for a few CPAs around here, it's like correcting a paper, a test. I use a red pencil. I circle things. Did anyone see me do that? No?
Yes.
Yeah, I do. Exactly. So that's why I think you should do it. I'm like, where you can ask, I can't quote prices because just because you're a real estate agent doesn't mean, I don't know how many rental properties you might have. I don't know how many types of investments you might have. It could be anywhere from $400 to I charge $10,000 for tax returns. All right. Depends on the complexity and stuff like that. Anything, you know what? You can ask questions during it because I will just keep talking and talking and talking. All right. Does that answer that, Kristen?
Yes, it does. Thank you.
I just want to make sure she's awake.
I'm awake. I'm totally present.
Okay, I'm going to skip and I'm going to do I'm going to talk about deductions later. What triggers an audit? Okay, so my answer is going to be, knock on wood, I don't really know because I don't remember when they've ever audited my work. Okay. I think one time 6 or 7 years ago, I have always one client that has property all over the United States and builds, and he constantly moves from state to state. And someone in Las Vegas wanted to audit all his businesses, and it just came through with nothing. I have no idea what triggered all the rumors about, home office deduction triggers and all that. That's BS. And like big expenses, that's BS. It depends on where you are. The key to you guys not getting audited, they're after money launderers. FinCEN, where you have to file things for they want to see people record their income. Well, in your industry, it's easy. You're like knocked right off the top because you get a 1099 for it. All right. So they're not coming after you for not recording income. Then we get to the level of expenses. Okay. Well, being an aggressive interpreter of the tax law, right, doesn't mean that they're going to audit you. And if they do audit you, which I believe is one reason why they don't come to our firm, I will argue my point. Okay. Just because one accountant says one thing, another accountant says another thing. This is why we have tax court. All right. Because I will argue it, and I have, and revenue rulings come out, things like that. All right. Because you do realize who writes tax law, right? A bunch of attorneys and politicians. Think about that. Have you ever read? Well, you guys know. You read legal documents, blah, 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 and then when you're done reading 10 pages of it, you go, what did they just say? Right? That's how the tax law is. All right. Now, for 24, there are really no 23 and 24. I'm sorry about that. I just did finish 23s. There are no real new things in tax law that affect your industry. They haven't really changed anything. And because of the new administration coming in, I don't believe they're going to change that much. They actually might make it better for you because the tax law is more for a small business, which is you, like aggressive depreciation methods and higher rates for auto and stuff like that. Are we learning anything? Or am I boring the crap out of you, man?
No, good
Okay,
stuff.
good. Good. Okay. The LLC thing I'll do at the end. And what do you need to make? Okay. What do you need from us to make the tax time smoother? How about the concept of keeping your records? You guys, I'm trying not to swear. Suck at it sometimes. Okay. So the best thing to do if you've never been to a CPA or an accountant is come in the first time and I will teach you what to do. All right. Now, I don't think now the brokers that I do a lot of brokers. I make them get QuickBooks and reconcile their bank accounts and do their 1099s and stuff like that. As far as the agent go, I don't think you have to do QuickBooks, but try to use one bank account and one credit card. It's going to make it easier in the long run. If you do a lot of transactions. If you don't do a lot of transactions, you can still run it through your personal account. Or the other thing with the credit card is, my new thing is, use one credit card for everything, get the points, and then you get the printout at the end of the year. That's a start, right? Okay, and then each month, so you don't pay the interest, just pay the credit card off, all right? That's the best record keeping route for those of you that suck at record keeping, okay? Now, also, please know, I do not want to see your receipts ever. I don't care, because if you get audited, the number you gave me is your responsibility to prove, okay? Not mine. I just have to do a due diligence on the concept of we put the right costs to the right place and we didn't put the baby stroller as supplies on your Schedule C and things like that. That's my job, okay? So I do have clients that come in and they get a piece of paper and then all their tax documents. And then if I go through those expenses, which I will go over, and I see that they're light on something or they missed something, then one of my staff members will call them up. I'm not good at calling people, all right? So that record keeping, that's what Brian wants from you, all right? And all your documents. First thing you can do is piecemeal an account. Oh, I got my W-2, my spouse's W-2. I'm going to send that to Brian now. Doesn't do me any good. Once you get everything, then send it to me. And if you invest in the stock market or mutual funds or anything like that, Bitcoin, some of your stuff's going to come later, okay? Some of them have till March 15th to get it. So if you invest in REITs or publicly traded partnerships like Sunoco Oil, that document isn't required by the government until March 15th. Now, normally you're going to be getting the W-2, your mortgage interest stuff. And please, if you're in the marketplace and you take a credit, you got to have the 1095-A or the e-file will kick back and they will not accept it. And then once you have all those documents, then you make an appointment. With a firm like mine, if you don't get in there by, say, March 20th, okay, I can't guarantee that we'll get it done. Because remember, everybody's bringing their stuff in at once, right? And extensions are not bad. They do not trigger audits as long as you have your tax paid in timely, all right? If you owe nothing, they will not penalize you. If you have a refund coming, you technically have 3 years to file the return. Now, I don't recommend that, but after 3 years, the government will not give you back your refund. But just think of this concept. If you get a notice and you owe tax 6 years later, you still have to pay it. So I don't get the logic yet, right? All right. So that's the things with that. Now, any question? Really? Dazzle me. Okay, so technically the due dates. The individual returns are due April 15th, depending on the holiday thing. Any other LLCs, single member LLCs are also due with that tax return, whether you have one for your Schedule C or your rental properties, which I'll get into later. If you actually have taken your LLC and created an S Corp, okay, that return is due March 15th. Now, I will say one thing about that. We kind of automatically put all the businesses on extension. The only thing you have to do the first year, if you're coming into me, all right, and you have an entity like that that's due March 15th, you got to get in there before March 15th, or at least email it to me so I can put it on extension. Because if you don't put it on extension, they charge $250 per month per owner as a penalty, regardless if you owe any money or not. Right. So that's a key due date. And the first year you can usually get out of it. We usually get out of a lot of the penalties unless you just blatantly don't pay your estimates. And then when you get these notices, I owe $3,000. Why didn't you? Why do I? Blah, 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 like my fault? Well, I gave you estimates last year. You didn't pay any of them. So don't tell me your problems. Okay. If you don't have the money to pay your estimates or you're making less, there's a big possibility that you won't get penalized because it's based on what you owed the previous year and stuff like that. But in your industry, it's estimates. How many pay estimates? How many get estimates and don't pay them?
Me,
Fine.
you know me.
Huh? Oh,
You know
I wasn't
me.
talking about you.
You could talk about me. It's all right.
Some people I give estimates to, they don't pay them. And then, whatever. So the key, are there any new real estate agents here that have not ever done one? Okay, are you guys crazy? I just kidding. Well, so most of you know this, that you put your income and expenses on what they call Schedule C, okay? Oops. Now, can you imagine that I didn't turn my phone off? Yeah. You know what? They do call us, but anyway. Okay, so I'm going to whip through these names. I could have copied this, but I'm going to whip through the expenses that you can take, and the ones that you wouldn't know, you might want to write down. And the ones that you're like, wow, I didn't know I could take that right down. But the obvious ones, I'm just going to go in the order of the Schedule C. And then, I mean, if they want to copy this and give it to you, it's okay. But you do notice that I don't use any notes, right? It's all up here, man. All right. So quickly, and I'm gonna go through each one. Advertising, car, truck expense, commissions and fees, and Keller Williams. That's the key because your 1099s are gross, and then you have these fees that they take out. Is it Keller Williams or Remax? And Keller Williams and Remax are the two that give the gross commission, and then you get a list of your fees and expenses. So you have to put the gross down there, but then the rest of it you put on commissions and fees. So you're technically only paying the net, tax on the net. Some people don't remember to give me that. Depreciation, get back to insurance. This insurance is only errors and omissions. And again, I'm going to go back. Legal and professional services, me. So that means basically if you're at the 15% rate plus 15% Social Security, you're really getting a 30% discount on my fee on your tax return. Think of that, right? Because I'm 100% deductible. Office expense, rent. Sometimes you'll rent something. Sometimes there's a desk fee taken out. I put it on rent, some things like that. All right. Taxes and licenses. You're buying every 2 years. You pay the license fee. Obviously, that's deductible. And what is that? Oh, my favorite: travel and meals and entertainment. My meals and entertainment budget is more than some of you make. Just throw that out there. And I take it every year because you, in my business, personal service, which you are, how many times do you actually go out and someone doesn't try to talk to real estate about you, right? Right. And if they don't, what I do, if I'm buying, I say, does someone want to talk about the tax law? Or the market, or the mortgage interest rates? Make the conversation happen. Okay. And I'll get back to that more. If you buy them food, absolutely. I would take all coffee shops. I'm going to come back. I'll finish a little bit there. When you're out selling real estate through the Poconos, watch out, I'm Italian. I feel like that. I take all the coffee. I take if you're out in Carbon County, you got to eat lunch out there because you were looking for real estate or showing a house. I'm taking that too. So anything that's out of the realm of here Exactly. If you weren't out showing homes, you would be eating at home, conceptually, right? All right. Yeah, we'll talk about receipts. That's why I do the credit card thing, okay? Because, you know, there's always a backup if they actually come, right? With that said, okay, here's everybody that files a tax return. All right, and then here's your industry, which they're not really after because you're recording 100% of the income. Then we get down to the level of income that you really have. I mean, obviously, I have ones that make hundreds and hundreds of thousands of dollars, but a lot of you may only do 50, 100 a year, right? Do you think they want to look at your tax return? Do you think that they'll get anything out of that tax return if they come in and audit you? They're going to send a human being to audit you to get rid of what? A couple $1,000s of expenses, which gives what to the government? $500? Okay, they don't have the time to do that. Now, as more sophistication in the computer systems and the e-filing, you could get a line item notice, okay, but you're not going to get audited. So as far as receipts go, yes, you're supposed to have receipts. Oh, line item notice is that they questions like your meals and entertainment, prove it. They can go after, or the big ones we get is contributions on the welfare people, prove the contributions. So they'll just do the line item, right? That's what I call them. So yeah, you're supposed to keep receipts. So what Brian does, I get a big ass envelope. I write 2024 on it. And everywhere I go, right, I get the receipt. Like if they say, do you want a receipt? And it's something I know I can write off. Like I go to Earthlight, they say, you want a receipt? I said, no. Okay. Anywhere else, like, you want a receipt? Yeah, I want a receipt. And then there was a real estate broker around here, if anyone worked for him. He said, and I would take everyone else's receipt that day. That was good, right? I learned that from him. Anyway, okay, and then there's one other item too, and again, I'm going to go over them. Cost to assist to close. So if you have to, I don't know, shut everybody up and buy the damn fridge so they just close, you can deduct that. Or shut up everybody and pay some fee for them because they're arguing and you're waiting on $10,000 for $100, you know, do it. And then you can take that deduction. Some people do that, not everybody, you know. All right, other ones, bank charges if you use a bank, continuing education, right? And initial, all your real estate stuff that you initially do, like to get your license, all those classes, all right? Parking fees and tolls, probably repeat some of these. Fines are technically not deductible. Did you hear what I said? Just technically not deductible, okay? So the best thing to do is, and let's not figure out, all right, I do Easy Pass and run the bill through my business, okay? So the worst case scenario there means, okay, they would have to actually pick that and then look at it, and then they might realize that my son's on my Easy Pass too. But by the time, like I'm going through these layers, by the time they get to that, is that really a reality? You know what I mean? So it like tolls, Easy Pass, parking fees, credit cards, stuff like that, postage, even though I said office supplies and real estate dues and fees. So you guys always have about like $1,200 a year in real estate dues and fees. I put that down as a separate line item so they don't touch it. And then your telephone. Okay. Now, would you like me to be a little bit more specific?
Yes,
Okay.
please.
So let's. Scary sometimes when she talks.
You can look straight ahead. I'm looking right at you. You don't have to look.
Oh, okay, there you are.
There I
But
am.
the sound's coming out there. I get like, what is that? Okay. Let's go with what your biggest expenses are going to be advertising, okay? And auto, especially in the Poconos. You know, honestly, the ones between Wayne, Pike, Carbon, Monroe, Northampton, you can do 20-some thousand, 30,000 miles a year for the ones that are really going all over, hustling. Some of them don't like to drive that far, so they don't. It's usually reflected in their 1099, but it's real. So that is usually, other than advertising and Keller Williams and Remax, the commissions and fees, the biggest expense you're going to have. All right. So The way the law is written, it's 67 cents a mile, okay? Which a computer calculates. I know in your industry, there's apps that, does anyone use the app? Right?
Yes.
Well, I'm just saying that, and they bring in this printout with the mileage, okay? The only problem with that one is it often misses other trips, okay? Like coming here for a meeting or going to the bank or going to your accountant or going to Staples for your office supplies. That's also deductible too. So they're good as far as your workday, but there's going to be other mileage, all right? So the problem I have with that is that's the documentation. And then if I add to it, you have to kind of watch it. You have to be realistic about it. The key to mileage, and it's too late this year, odometer reading in the beginning of the year and odometer reading at the end of the year, because that gives me mathematically the amount of miles that I could take. Okay. If you come in and they can check it through VIN, they have ways to check it through the VIN numbers and the history. And when you go online to do your registration, you have to put the mileage down. There's ways of them to find out. Or if you take 20-some thousand miles a year and you've had your car 5 years and it only has 50,000 miles on it, all right? So that's the key to that one. So even if you are not good at record keeping, I can talk to you and like take a percentage, all right? Say, okay, you did 22,000 miles, let's say, and you have kids and you got to go back and forth to school, blah, 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 and then you have 80% of that I'll take. Okay, so that's the key. Remember that, all right? Now, if you have a significant other or another car within your family, yes, you can use more than one car. There's nothing in the law that says you can't use more than one car. Let's say you use most of your 70% business, but when someone takes a vacation or goes somewhere else and you need their car, then you keep track of the mileage on that car also, all right? I do not recommend taking the actual costs in your industry. For the most part, the mileage rate works the best, okay? Unless you're the broker or something like that. That's a whole other story, because if you're corporate level and you can have, right. We're not going to do that. That's 570-424-49. What's my number? You know, with my cell phone and email and shit, I don't even remember my business phone number. Anyway, so multiple cars, just keep track of it. Remember, if you take the home office deduction, right? I'm not there yet. Okay, I'll talk about that later. There are no commuting miles because you start at home. That's the law. Now, if you don't take the home office deduction and you have to drive to your first home, the Staples store, the bank, or here, that commuting mile is not deductible. Okay? Just remember that. You have to have commuting miles on your tax return, which means you're not, if you, well, it's, when you look at it, it's business, commuting, other. So they're specifically asked for on page 2 of the Schedule C. All right? But again, if you work from home, you're starting there, right? So it's your first place of business forward is business mile until your last place of business, which can be a mixture of anything, all right? And think about it. If you go to the bar, I'm going to call it the bar because I do this often, that's like less than a mile away from my home, right? Then my last commute, that's the last place of business, isn't it? Right? So think about that stuff. Very important to remember that. Now, if you do have a home office, I will throw on, I call it throw them a bone. I'll throw like 100 miles on that line just because that's my rule, throw them a bone, you know what I mean? Okay. Now, the 2025 rate, I don't believe has been released yet. So basically, they're probably going to keep 67 cents, okay? Remember, if gas prices go down for a longer period of time, the rate goes down. If gas prices stay the same, they'll stay at 67. If gas prices go up, then they'll raise it. historically, one year they raised it in the middle of the year because gas prices went up so much. Okay. So that can happen. All right. Questions about car and truck expense. Keep track. They technically want a, what do they call it? A log. All right. But again, the one time, this was a long time ago, someone hired me to go to an audit and they said something about the log. And so we made the log up. All right. And I'll tell you what kind of record you need to keep to eventually make it up. And the auditor said to me, "Did you just do this?" And I said, "Yeah." I said, "The law doesn't say when I have to do it. The law says that I need one, right? So you want to test it, go ahead and test it. With you, it's simple. It's don't you have all kinds of ways to what you did during the year between the showings and everything, like on your computer and stuff like that? The other thing is you can do I use a Google Calendar to write notes on it, okay? Because then I always have access to it. And not only that, but then my staff has access to it, and I actually have it on my phone so I can make an appointment or say that I went here and there. And then I kind of breeze through it. I take whatever I want with my mileage, but I sign my own returns, right? It's all what you're comfortable with.
Hey, Brian, can I ask a question?
Yes, ma'am. I have, I got two going here. Go ahead.
I just wanted to ask about vehicles. So say your car takes a dump and you need a new car and you have a car payment. Is that any portion of that or any auto repair something you can
Okay.
deduct?
All right. So that was a valid question. I can tell you've learned from me, right? So if you use, these are the other expenses. Gas, no. Repairs and maintenance, no. Cost of the car, no. That's all, and depreciation, that's all included in the mileage rate. But if you have a loan on your car, okay, and you have these, this is when I get really technical, better than the other accountants, and the interest, and you use your car 80% business, you're allowed to take 80% of that interest as other interest on your Schedule C, because that's the business portion of your car. All right. Lease payments, no. All right. We just ignore them. All right. Yes. Yes. I know. It's fascinating, isn't it? Because that's the mileage rate. Leases have nothing they use the mileage rate. There is no additional cost. And the other additional cost is the parking fees and tolls. So they're the two things in addition of the mileage rate that you can take. All right. Yep. For the percentage of the business. The harder thing with the car loans is that it's not like a mortgage. They don't tell you how much your interest was. So what I do is I take the, and you can do it, take the original purchase and put the numbers for your loan and make an amortization schedule. All right. And then you'll have your interest every year. It's very easy if you have Excel or, I mean, you guys have got to know how to do amortization schedules, right? I mean, come on, you're real estate agents. Yeah, well, I'm just saying it's throwing three numbers in, and actually, if you throw two, it's 3 out of the 4, basically. Yeah, and that's a way to keep it. And that is an additional expense that people do miss. Yes.
So, yeah.
No, God, no. Mileage rate. That's the other wonderful thing about it is when you use the mileage rate, it's just less work. Can you imagine going through and adding up all your gas receipts, your repair receipts, and your Well, no. You still technically the way they do that, which is fascinating when you do the actual cost, they still want the miles. That's how they do it. So if you put 10,000 miles on your car and 8,000 of it is for business, I have to put that in there for the actual expenses because then they're going to take 80% of it and 80% of the depreciation and so on. Now, in a business, not yours, in case anyone has another business, you use a car that is, and you need to use it. And some of you do have these that are more than the 6,000 ton ones. Like you get full depreciation on them. Sometimes I'll look at it, but for the most part, you guys are more of a sporty kind of car thing, which is called a luxury auto. And I'm not touching that with depreciation. All right. Any more questions on car and truck? I'm not, well, no, I never do 100% on any car, only in businesses that have delivery trucks and stuff like that. All right. But I do take, I'll take 2 cars. Sometimes I take 3. It depends on how many cars they have, because even if I only take 1,000 miles on the one car, it's still valid if I can prove it. Right. The key here is I'm not a tax collector. Okay. I want to write off as much as I can. Okay. This is what I do. Here's the law, right? Here's jail. Here's H&R Block. And Brian just kind of hovers up down here, depending on which code it is, which ones they attacked. These are the things I know, okay? And how comfortable you as a taxpayer is. So many people come in first year, my meals and entertainment, $200. Like, okay, there are 52 weeks in a year. So how much did you spend a week? Not even enough for coffee anymore. Think about it, right? 52 weeks a year. If I took $100 a week for meals and entertainment, that's 5,200. How do you not spend that when you're out traveling around, right? Unless some don't, I get it, but generally in your business, you're buzzing around all the time and you got to go eat, you take clients out, you buy, I'll do gifts later, right? Think of the logic. Math, I always go back to the math. Mathematically, what's realistic? And the more your 1099s go up like that, the more meals and entertainment goes up, the more travel goes up, the more the mileage goes up, just based on math, okay? So.
At one point, you said about expenses.
Was this one of my classes or? Yeah, okay, all right. I'm not that old. I don't know how that happened. Yeah. Go ahead.
The expenses you had said was record keeping, that it says you have to have a good faith.
Yeah.
Is that still, in other words, if I have?
Well, it's tough because I know what the law says, but I honestly don't have experience with auditors anymore. Okay. The only time I've had to come up with actual receipts was when some of my wealthier clients get notices about prove your donations. Okay. So let's say they take non-cash or easy because you usually have a letter for it. This one lady took $12,000. I said, give me your receipts. They added up to, I don't know, 10. Then I just wrote a bunch of numbers on a piece of paper, like, raffle tickets, this, and here's 2,000 without receipts. Okay. And they let the whole deduction go. So it really questions on what else are you doing? Are you committing frauds by creating numbers that are so far off? Then they're going after the jugular. And then they'll go back every year that they can and do the same thing. But if they come in and here's my receipts and you throw it to them, if the auditor literally sits there and goes through every office supply receipt, then the government's wasting their money on his or her salary. You understand what I mean? So generally, and then that's why I also say the credit card. Now they can say the credit card isn't a receipt, okay? That's arguable because technically if they push you, all the codes are there. You can literally get receipts on all those things through the credit card company or the other company you got it from, but it might be costly. So like I said before, what did I do? I take a big envelope, I get a receipt, I throw it in there. I don't sort it. I don't look at it. I keep it for the 7 years I'm supposed to. And then if they don't ask after the 7th year, I throw it away, but I have it. Okay. That's the physical receipt. Right. So when they say, do you want a receipt? Because a lot of them, some of them go right to your email anymore. Right. So you do have receipts. Right. It's different now. Back then, it's harder because and the paper back then would fade by the time they got there. Some of those printers, right? Anything else on car and truck? Oh my God. I hope you have tax. I'm just kidding. I'm going to do that last, actually. I was just saying if If you do have a home office, the commuting miles can be 0. All right, let's go through some of these quick. Advertising, that's the dumping ground. If you don't, advertising obviously with you guys now is all the internet fees and the special apps and all that stuff like that, right? You know what it is. Or if you do mailers and things like that, there's a whole different level. But to me, it's a dumping ground because you're salespeople. That's one of those expenses in my mind they're not really going to look at. You do sales, you have high advertising. Even in years like the first year, people can very easily be a loss. Okay. And I will take it all. If you can prove to me that you did all the advertising, paid all the fees, did all the mileage, and your first closing wasn't until January of the next year and it's 0 income with all the expenses, I will take it and I will argue it. Key to that is there's a box on the Schedule C that says, is this your first Schedule C? To me, that's a little, we're not going to look at this one because we know you're going to do upfront money and you could very easily have a loss. All right. So just remember that. So advertising fees, car and truck are good. Commissions and fees, you understand, you get a printout every year. One thing that bugs the crap out of me is when you work for Keller Williams or Remax, I'm like, where's your printout? And then they'll say the broker's name. So do you think I'm going to call your broker? Even though the broker's a friend or a client? Like, get that sheet of paper when you get your 1099. Depreciation. Well, your 1099 is gross, and then the Keller Williams, you pay expenses to them. I don't know if it's the EO fund or this fund or the desk fee or the other commissions to it. You need that because that's a deduction, and I can only get that from the printout. Okay, and it's huge sometimes. All right, depreciation. What can you buy? Depreciation is a method that if it has more than a year life, we want to be able to write it off. Okay. So I have to do depreciation. That's the only receipt I may ask you for. In your industry, it's computers, laptops, phones, if you don't pay the monthly payment. I mean, if the monthly payment's on your phone bill, I don't depreciate it. What else would you buy? Yeah, Sienna printer. What else? Huh? No. Well, that would be a rental property. I'm talking about the operation of your business. They're the ones that I would depreciate. That's very important to do that because a lot of people come in the beginning after they had the training. What about your computer? I don't know what year I bought that. Really? Okay. So remember, first year people. If you bought a computer a year or 2 ago, I can still take it because the tax law says allowed or allowable. So if I buy it for $1,000 and I get 20% of it a year, and you placed it in service because you started a business that year, 2 years later, okay, at the 400, follow me, I can place it in service for the $600. Okay, because if I started it at 1,000, it would have taken that many years, and that's what it would have been. All right. So it's allowed or allowable. So when you start up a business, especially construction people, I'm like, okay, where's your tools? Where's your compressors? Where's all? Well, I bought that this many years ago. Write it all down for me. And then I get this big, huge deduction the first year because of the way the tax law is written. Okay. While you're running a business, all right, how many people that have kids or spouses, is it all on one bill? Right? How many times do you have to buy a computer for maybe the kid or the spouse? Do we really know who's using that? Just throwing that out there. Get what I'm saying? Just throwing that out there because they're going to look for the receipt. And I have 3 laptops. Okay. I buy one at least every year or 2. Don't ask why, but maybe it's a problem I have. Okay. All right. So just remember, so depreciation means if you buy something that has a longer life, okay, then I have to know that specifically. You can't dump it in office expense because they could disallow it then if they find it there. Technically, I can get out of that too, but regardless. And here's a good one. Home office, and I know I'm going to go back to this. If you have a home office, all right, home office, and it's a real home office, like by the letter of the law, like I have one in my house, that it is just the office. It's not the bedroom or the playroom or whatever that you have to clean up before the auditor comes, right? Just think about this. If it's your home office, everything you buy for that office, I can write off on the business. So the artwork, the desk, the carpet, the bookshelves, all that stuff. So if you do have a real home office, you want to make sure that I have that information, and I will decide what I can do with it. But if remember, Brian doesn't have the information, he can't do anything, right? Yeah. Home mortgage interest is part of the home office deduction. I'm going to do that last. Yeah. All right. Insurance, the only insurance that you can deduct is the E&O insurance if you pay it yourself. All right. If you have health insurance and you're self-employed, okay, remember, you can take that as a deduction, but it goes on a Schedule 1, page 2, I think it is this year, against your self-employment income. And that's a big ass deduction. Before, my health insurance is like, just for me, it's $1,100 a month. So I get that $13,000, $14,000 deduction. Now, it doesn't go on this form. It did a long time ago, because you're not allowed to take it against your self-employment income. All right. This is subject to self-employment tax, but you don't have to pay income tax on it if you're self-employed. So you get that deduction. Yep. Well, I'm going to say this, I deduct it. But if it's a benefit from a business, no, because it's usually pre-tax at that business. Okay. Or like if you're a teacher and you get all the benefit. Yeah, that he pays himself. Well, it's a family thing. Even if you don't want to be conservative, just take the portion that's yours. You file a joint return, right? Yeah. So, that's argue. I can argue that one. I do it all the time. I take that health insurance and put it on wherever I can take it. And I take the full family plan, and knock on wood, I do this all the time. I've never received a notice on it. Okay. And now, yeah, why not? Isn't that part of your health? Do you want bad teeth when you're selling shit? Sorry, I didn't mean to say that.
I'm sorry.
Yeah, I'm not going to say that till I get to the LLC concept. Okay, remember, if you're an LLC and don't sub S, which I'll do again later, you're still filing a Schedule C as a single member LLC. All right, there is no entity unless you do actual other applications. All right. So, but it's remember, health insurance is always personal. So if you have self-employment income on your tax return, you will be able to take it on another part of the tax return. Okay. All right. And then legal and professional fees. Usually it's just me, but some of you end up paying attorneys sometimes because of stuff you may have done that you shouldn't have, or they thought you did and you had to get an attorney. So just remember all those if you do it. Right. Office expense, everything that you buy. And I don't care what, did I say this? I don't care what you use it for, but if you buy it at an office supply store, I'm taking it. Okay. All right. Huh? Amazon's, yeah, anymore. Yeah. Well, I say staple. Amazon's staple. All right. It has to actually have an office supply type of description. Okay. Like envelopes, paper, toner, pens. But like, again, if you have kids and stuff like that, there's a plethora of stuff that you get at those places that, could just, oops, sorry. It's oops, sorry is an easy one. You don't go to jail for that. Okay. Rent, other business property. Does anyone rent another place, or that you do? So if you, yeah, no, you rent for your real estate business. Okay. Some people do, some people don't. Oftentimes it's more, obviously it's the brokers, and sometimes it's rare that the agents, unless I call it the desk fee. Do you guys do the desk fee on that one? I sometimes put on the rent line, right? Supplies, it's another dumping ground, If you don't know where to put it on your tax return, at first it would try to go to advertising. Second, it would go to supplies. All right. I call them dumping grounds expenses. Taxes and licenses, you really don't have any taxes because you really usually don't have any wages, again, except for the brokers. And that would be your license fee every 2 years. Okay, travel. Travel's so fun. Okay, so travel. All right, so travel is hotels and taxis and trains and planes and stuff like that. Automobile rental, or although the auto rental you can put on another line. All right, so simple ones are if you go to a conference for CPA, that travel is all deductible. If you have to go to some kind of other meeting somewhere, that travel is all deductible. Okay, so come on, someone's gonna ask me the question. What if I go to Florida? You know, I was waiting. Here's the concept, okay? It's what you're comfortable with. If Florida is a good example, because many a time people will refer client, because people want to go to Florida, okay? My stepmother is a real estate agent in Florida, but she also has real estate agent friends here, and they will send clients to her, and they will also come down with them sometimes, rich people, you know, and then help them with my stepmother. That I'm going to take a portion of that travel. Now, if you take your kids to Disney, I'm sorry, that's a tough one for me. Okay. Then the other one, I have my one story. I had a jeweler in town in the jewelry store, and he would go to Florida and he would buy product. A lot of it was handcrafted, or he would know a diamond retailer or something like that. I took those trips. The point is if you're doing something for your business where you're going, or even a portion of it, then I will take a portion of it. It's better to have the conversation with me about it than not do it and you make the decision that you can't deduct it, because that's not always true. All right. How many people go places and here's another one, as the real estate agents get older and they want to transfer their license to Florida, the closer they get to that, I'm starting to take those Florida trips, because they're down there looking at real estate, they're looking at brokers to work for, they're looking at transferring their license, right? So that's another time to do that. Or if you are moving, say you wake up and say, I want to move to Texas, and you go down there one trip to check out where you can, you know, hang your license or whatever, I'm taking that too. All right. So any indirect angle to it. But remember, if you take your family or yourselves to Disney, I can't do that. Okay. Right.
Let's say,
Oh yeah, I would do that. That's a good question. Did you hear that? Like when you travel and you have to buy the internet because you're still working, remember that one. That's a new one. I might have learned today. Yeah. Well, the position is if you're doing work that you do it, right? Yeah, I agree. Yeah. Yeah, but well, everything anymore. So much you can do on the phone anymore. It's just unbelievable. All right. Any more travel questions? Nothing, really? Nah, I don't think the length is more of the, I do an allocation concept, okay? So I talk to you, say, well, what did you do down there? And you said you did this, this, and this for 2 days, but I went with my significant other or something, or a spouse or something, right? So I take half of that and then I multiply it times another half, so that ends up being maybe 25% of it. So, but my point is let's not miss that 25%, all right? And even if it's 10%, remember, if you pay 15%, all right, I didn't go through this. Let's say you have the low tax rate of 15%. Social Security, I hope someone has a calculator, is 15.3%. State is 3.07%. And local is a minimum of 1% unless you live up in Milford. But if you live in the townships, it's 1.25%. So every $100, what is that up to? 30? Did anyone add? Thank God I'm not giving credit out. 35. Okay, so every $100 that you remember to do, you get 30. That's $35 less you're spending on taxes to all those agencies. Okay, that's the way to motivate you guys to save as much, or think of things that if they're borderline, it's better to save it and have a conversation than it is for you guys to make a decision that it's not deductible. Sometimes I laugh in your face. That means that's really ridiculous, but thank you for asking. Yeah. Okay, wait, no, if you are a real estate, this is the borderline one, but if you are a real estate agent, and again, some states are very easy to make this position because a lot of these people around here will retire to Arizona, Colorado, Florida. My family's more like Vermont and Maine. Yeah, and Italy, yeah. So yeah, and then I would, again, if you were looking for a broker or you wanted to find a broker and you got some literature and stuff, that's always part of proving that you could take part of it. I always said that. I said, if you want to do it and you look around, go look around at houses, stop at some brokerage firms, get some literature and stuff, throw it in there. So you did some work because you have some clients that want to go down there and blah, blah, blah. Get the point, right? But nothing to back it up, that it doesn't really help me. Did you have a question that I didn't? All right, no, I didn't write that one down. Uniforms are deductible, but they have to have the embroidered. Wilkins is always the best one. He knew the law. Like, so if you looked at Tom Wilkins's stuff, you might do it. I'm sorry, I don't, but I remember everything that he has, it's embroidered on. If you have the little tag that you pin on, the tag's deductible. Okay, but, huh? So if you get the crap embroidered or like screen printed on shirts, that's our advertising. That's a uniform to me. Okay, they know where you're from. Okay. So does that mean, because I'm a big skier, that when I buy something at every single mountain and I do ski areas and ski shops and stuff, does that mean that's deductible for me? Oh, thank you. I didn't put uniform down on there. See, I can't remember everything. All right. Is it embroidered on there? Like, is it part of it? There's the logo on there. Yeah, that I would write off. There's a line called uniform, actually, that I didn't say because it's not a big thing in your industry, but you do it. So there's an actual line for uniform. I would take anything that has that logo on for the place that you're getting the 1099 from, okay? Because that's phase one of, is it deductible, okay? The big ones are the movie stars, oh, I wore this to the Grammys. Well, then what they did when they audited them, well, I have a picture of you wearing it to so-and-so's wedding. Okay, all right. Point is you have to really prove that it was just work. So the safe route in your industry is the actual logo. It's the same thing with a car. If you get one of those magnet ones and stick it on your car, I can take the magnetic sign, okay? But if you get the whole thing wrapped up, and I might go for 100% of the car because that is just one big advertising vehicle. I wouldn't say do it because what happens if you change brokers? You're screwed, right? Yeah, buy a new car, yeah. Okay. Meals and entertainment. All right, I started out saying most of the time when you come into me, you're way low on meals and entertainment. The fun thing about the pandemic was we were allowed to take 100% of meals and entertainment that were done in the restaurants. So that like if you did the to-go, the fast, but if you went into a restaurant and sat down, I got 100% of it. That was beautiful. Now we're back to 50%, okay? Here's the concept. I don't think the IRS audits meals and entertainment because what they've said, blanket, put as much as you want down, we're only allowing 50%. So to me, that pushes it out of the audit concept. It's not a big number to audit, all right? So basically, the concept is when you're out, if they wanted to really get down to the nitty-gritty of the law, you would take that receipt and you would rate what customer was on it and then throw it in the bag, okay? This is where I go back to my Google Calendar because I know what time of year I'm working on what people. It's easier in my industry because the ones that spend a lot of money, I could write that on every single one of those receipts and it would be hard to argue. Right. But so if you want to be really good at it, you would write down, oh yeah, we talked to this potential buyer, potential seller, blah, 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 meetings with the broker, things like that. How long am I supposed to talk? Does anyone know? Kristen, how long am I supposed to talk?
You can talk as long as you want, Brian.
Okay.
You're not on any sort of time restraint. There's nobody behind you.
Okay, good. Okay. So if you want to be real technical, you would just write down each time what it was, just as a little memory. If you think you're going to get, if you're paranoid, think you're going to get audited and stuff like that. All right. But basically, it's all about, did you talk about, right? Did you talk about real estate? Was it with someone that has something to do with the sales, things like that? The other one that I do is when you're out traveling, right? For, to show a home, meet someone, potential, blah, 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 and you have to eat while you're out, which we covered before. I also take that, all right? You know, Starbucks in the morning, pushing it, but you know, why not throw it on there and let them tell me it's not allowed? That's my position always, all right? So that becomes when you start doing the math. I mean, like if you actually go out with all the other agents to talk about obviously just real estate, right? That's what you remember that. It's always, what did you talk about when you were out? Thank you. Because that's your only answer to an IRS agent, right? It's simple to spend in the Poconos, especially with my drinking habits, $100, $200, $300 a week, right? I don't know if anyone else does that. And buying food and blah, blah, blah. I try to push it off on the client because I'd rather have free than the deduction. Just throwing that out there for you, because that's a bigger savings, right? All right, and then remember, it is just 50%. Now, not that you would do this, but sometimes based on the type of meal and entertainment it is, I used to throw some of it into advertising and marketing to get 100% of it, but now they're getting worse with it. They're saying that even as the broker, the coffee that you buy for here isn't an office supply anymore. You have to put that into meals and entertainment because they've really started to crack down on what things, because we would used to, like I would get all the stuff for my office from Staples, right? But now I'm supposed to pull that out, put it in meals and entertainment, and only take 50% of it. Do you think I'd do that? The cost benefit concept. It would take me, for what I charge an hour, longer to figure that out than to have them disallow 50% of $1,000. All right. So you got to think of that kind of stuff too. Right. Questions? I still have more deductions, but go ahead. Again, I have no experience, but I'm going to go with it with you. All right, if they go through your Schedule C and they want to disallow stuff, all right, and you're going to say, okay, that it's not worth arguing, then you just pay the bill and move on. And hopefully you didn't do any gross negligence shit, because if you did, they have the choice to go back 7 years and audit every single tax return. I don't know. I put my big ass my Range Rover for $90,000 and I wrote it off in 1 year. Yeah, I know. So that was easy, right? Well, technically they have a percentage thing there because it's a business part, right? So like you really have to do it. Or I took $12,000 in meals and entertainment and I only have receipts for $500. And if they look back and see that you did $12,000 a year, they're going to go back and try to disallow that every year. Okay. Now, if it's a point of law, I argue them, right? Because like, all right, so they come in, right? Sometimes it's because people hire us to go to the audit. God, they're not that bright. This one guy said, blah, 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 blah. And I'm like, that is not the law. Yes, it is. I said, no, it isn't. I said, you need to call your supervisor up or you're going to be in some trouble here, because if I take this to appeals and told you, Supervisor said, he's right, just let it go, kind of thing. So if it's a point of law, I will continue to argue. The thing is you can push it, all right, but you can't push it too far above what you have access to. That's why I say the envelope thing, of putting all your receipts in one big ass envelope is very easy, or using one credit card. Then you have a basis of what you can, or the odometer at the beginning and the odometer at the end, because all that gives me a basis of what I can take. And then it's just a matter of, do I take 80% of it, 90% of it, 50% of it, and so on.
Do they still have the, what, 179?
Oh yeah, that's depreciation. But yeah, so when I said the depreciation, basically it's 100% write-off, which is section 179. But if you don't have a profit, I can't use that. I can only take it down to break even. Okay. That was almost a 570-424-4900 question. Okay. All right. So, okay, so I can't say I have loads of them because I go on that point system thing. Like whoever's giving me better points, I do it. I pay the other one off, and then I zap that one up, but I never really close them out. And then I have kids that I give credit cards to. Tell me how stupid that is, right? Right. I try to use one credit card for business. Okay. Now I was using just one credit card, which was the Best Points card for business, and then Intuit, QuickBooks will come a year later and automatically charge you again without any authorization. $800-900. You know what I did with that credit card? I paid the last bill and I locked it, because now it just kicks back. And guess what? Oh, my QuickBooks still works, right? So you got to watch that. The other one I use is an American Express, because there's more of it. Like, so I'll run so much through that. That's my Square American Express. And what they do is give me free charges. So like, instead of charging the 3%, it'll build up to whatever you can charge. You can get charged on your business 2,000 some. So my point is try to use one or two, but if you have to switch them because of the point thing, and it's worth it. All right. Are you talking about other LLCs because you have like rental properties and stuff like that? Is that what it is? Well, yeah, that's a different concept, because there shouldn't be to me, the Schedule C would have the more of the operating expenses, the ones that they're really going to look at. I've never seen a rental property get audited as long as I've been in business, or my father's, you know what I mean? This one gets audited because it's subject to income tax and Social Security tax. One of the reasons why the rentals don't get audited as much, because there's only so much you can do, and it's easy to track. And if you make a certain amount of money, it's called passive income. You don't even get the loss. All right. So yeah. So I don't care if you have one if you have multiple LLCs and you have one card for them for the rentals, that's fine. But in the businesses, I'm just saying, try to have it at one. It's just easier record keeping. All right. Now, if you don't have good cash flow, obviously you could be using 5 or 6 different credit cards depending on the month and how much you make. I get that concept. I'm just trying to, the ease of record keeping. It's nice to have one, right? Because then the summary comes in. And I also do this thing. Again, I'm back to my throw them a bone, right? So my business cards will have 80 to 90% of my meals and entertainment, but once a month, maybe twice a month, I make sure I put one on my personal, so that I can prove to them that I only charge my business meals on my business card, but I charge my personal meals on the personal card. That's the concept. All right. I'm always setting myself up to what if, but it never happens, but I don't mind doing the what if, right? Okay. Bank charges. If you use a bank account and you pay a service charge, take that. You guys don't take credit cards, but if you use credit cards, that would go there, right? Continued education. How often do you guys have to do that? 2 years. Okay, so that's all 100% deductible. And if you travel for it, your industry and my industry have created these trips that end up being 100% deductible. So when it says go to Aruba and get your credits, That's 100% deductible because they designed it to be that way. Okay. So, but just saying that might give you a little discount on it if you want to take one. Yes. Oh yeah, I would take it as long as it had something to do with your industry or the finance industry or the, anything to do with your industry, right? If you're going to learn how to say something, something that has nothing to, huh? Yeah, I'm not going to take it. But yes, anything that's learning is that. Apparently, you guys taken that one, right? See, well, I got the example. Is that good? I put postage down separate. Sometimes I dump that into office and stuff, but you guys occasionally will do mailers and then forget to give me all the postage shit. Yeah. I would take percentage of it. Yeah. Yeah, that's what I was saying. Like if you are going and you are doing something that's part business, I need to know the total cost so I can take a percentage of it or the specific costs that would be allocated just to that hotel, that event, or whatever. Right? Real estate dues and fees, they're easy. You got to pay them. Make sure you remember them all. I can't believe that I'm saying, what are your real estate dues and fees to some of them? They give me a number and I'm like, you're in Pennsylvania. They can't be that low. Right? You're working for this broker. They can't be that low. And then they'll go through and they get the number. You guys leaving? Okay. Excuse me. It was nice seeing you. Thank you. You too.
Nice meeting you,
Nice to
sir.
meet
All right.
you. Yep. Enjoy. All right. And I'm almost done anyway. Not that I need to tell you, but that woman and her husband have been clients forever. Okay. So, and last one is telephone. Telephone to me is just so much easier and easier to take 100% of it. Because my position is how can you possibly be in this industry without this? Don't you use this all the time, every day? Okay, so, and here's my other angle for it. So the reason why I have the all-inclusive plan, which is the more expensive plan, is because of my work, correct? So if an auditor said, blah, 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 I would say, well, if I didn't have it for work, I'd buy that, pay by the, what are they called? Pay as you go, right? Why would I need to spend that much money on a phone? Now, if accidentally one of my children's on the same plan, I'm going to let them find out about it. Okay. So, and cell phones can be expensive. Now, like I said before, if you actually go outright and buy the phone, make sure you give it to me because then I have to appreciate it. But if you're buying the phone and it's, the monthly payment, which most of the time it is, then it will be on your total bill for that year. Family plan, you do what makes you comfortable. That's fine. Then that's good. That's very good. That's the right way to do it. Well, I might take half of it. I didn't get to that yet. I'm almost there. Okay, so here we go. I'm almost done. Don't get too restless. Have you guys learned anything?
A ton, always. Thank you.
Thanks. Hi.
Hi.
That is so confusing.
I know.
Yeah. So, all right. The last one I'm going to do is home office. So do you have any questions about any of those expenses? And LLCs, I'll do that.
Your first year, you have a loss.
Okay, wow, that's almost a 570-424-4900. But the answer is it's collected through all your types of income. So if you have a job, then no, that you're going to get it against that wage. Okay, but if that's the only thing, they do carry forward. All right, credits carry forward, losses carry forward, depreciation carries forward, passive losses carry forward. So yes, that's an actual good planning tool too. Okay, any other questions about the expenses? I know I said this before, but you do notice that I don't have any notes. It's all up there. That's how, like, maybe I should go to a psychiatrist, because if that's what's in my brain, how crazy is that, right? Home office. The key to the home office, the one thing that, okay, couple things. Except for long time ago when the brokers actually had an office for every agent, which is not real anymore, right? Or even if they had a conference room you could go to, or you shared an office, okay? If you don't have an office, then you have a big chance of taking the home office deduction. Okay, let me say one thing, another thing about the home office deduction. Don't be afraid to take it if you do actually have an office. Even if you have one here, you still have an office, because it's not a big deduction. The end of the day, right? It may only be a couple $1,000s, but again, if you do that times the 35%, that's 700 in taxes, so it's worth it. But it's not big enough to have them come in and look at it, right? I remember there was a wacky one that came in. I had a business partner that had some audits. Came in and he did these statistics, and then he said he wanted to go to see the home office. And I said, you are not going in those people's home. Let I'm going to disallow it. And I said, well, I'll argue that in appeals, right? Here's a picture of it. Who says that I have to let you come into my home, which would drive me crazy. Can you imagine the other crap that they say in there? All right. So concept is your home office is 100 square feet. Your home or rental is 1,000. You get 10% of the expenses. That's all inclusive. That's repairs and maintenance, owners association dues, all utilities, homeowners insurance, real estate taxes, and mortgage interest. You plop that on the schedule and it takes 10% of it. It's a different calculation if you itemize your deductions, but I'm not going to get in that because most people don't do that anymore because they raised the standard deduction. And if you feel uncomfortable with it all, you click this little box and they give you the simplified method, which gives you like $800 to $1,200 deduction. Then you don't have to put any of the expenses down, so they can't audit the expenses. You just have to put down that you have a home office. And then to me, the simplified method, they're never going to ask or check. So you get what I'm saying? If you actually took the depreciation, all right, which I don't always do, you have to pay the tax just on the depreciation. Now, remember, depreciation on 10% of a home for 27.5 years means over 5 years, your depreciation might have been a couple $1,000. All right. Then you pay tax on that, which is way less than the deductions you got over the years. Okay. Yep. I'm almost done anyway. So again, and if you do take the home office, you get that less commuting miles. And the next thing is, you really should have a separate room. Did you hear what I said? Really should have a separate room. If you use the living room or the spare bedroom, they might, if they went to see it, they would question it. But again, at the same time, and if you have an office, like you're one of the the agents that have an office at the brokers, then it's a borderline thing too. The reason why it became so wonderfully deductible was COVID. I took everyone's that year. Almost every self-employed person, I took it on theirs because they couldn't come technically by law to some of those offices unless you were, what was it called? Essential. I was essential, just so you know that, right? Because I did payroll. I have a payroll company. All right. So I'm going to continue to do it because a lot of them don't. Oh, thank you. All right. So other than the LLC, I don't have any more stuff on your questions, expenses. You learned enough? I'm almost done. Thank you. Okay. Here's the concept of the LLC. You're going to have to come meet with someone like me because it's too intense. The only time you should do the LLC is if you're one of those people that makes a lot and you're paying shitloads of Social Security tax. So if you have a net income after all those expenses, say of 100, and your Social Security tax is $15,000 plus the 1% for the local, because S corp income isn't subject to that. I can show you how to get rid of that. Unless you think there's a need to send the money to the Social Security Administration. So I can literally structure that based on that example because you still have to do a wage and there's additional fees for the payroll and the separate corporate return, which means you have to make an S election. And you can do it in your actually Keller Williams is one of the best ones to do it. Don't they have a department that does it for you? Yeah, right. Okay, so back when I was doing them, the accountants were saying, other accountants say, you can't do that, you can't do that. I'm like, yes, you can do it. So now the big companies know that you can do it. That could end up saving you $10,000 in Social Security tax by doing that. Now you might spend a couple $1,000s more in fees. This is the part of the 5 and a few $1,000s because you have to put on a wage. But wouldn't you rather have the 10,000? But it's not worth it if you have lower net incomes, because then I'm the one making the money and my payroll company is making the money. You know what I mean? It's not worth it. I did this one and it wasn't real estate, just as the last example. They came into me, their net income was 80 and they had a $40,000 one-time depreciation deduction. That's 120. I'm like, man, we got to SU or you're going to be paying, $20,000, $30,000 more taxes. Like I asked them, they came in, they had a loss. So it didn't mean anything that year. But again, so it's a planning thing. That's why I do it. It's usually, and most of the people in your industry that have been doing it a while and have more like CPAs, more advanced accountants, and do have that consistent net income, they are S corps. Yeah.
When does that?
Okay, you have to make an election for the year by March 15th. So if you are an LLC and you want to be an S corp, or you're not an LLC and you want to be an S corp, you got to do the LLC thing, and then we have to make the S election for 2025 by March 15th. All right, but again, that's stuff that you would come in and see me for. All right. A lot. Yeah. 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 Yeah, that might be a borderline time. That's the thing that you gotta like, that's what I go over with you. But okay. I'm done. Oh, I said that health insurance when you're self-employed. Oh, LLC, single member LLCs, okay. You're still going to be on a Schedule C, so it's still deductible on what they call Schedule 1. When you're an S corp, okay, it's only going to be deductible when we do the wage. So we make sure that we do the wage because you're an employee. So a 2% or more owner of an S corp can get the same health insurance deduction as long as they have earned income of that amount. So usually the least amount that we do is $10,000 to $20,000 of wage to save the Social Security tax. All right. And on the S corp, you get 100% deduction against the PA income, which you don't on individual tax returns. So that's another benefit too. Oh yeah, you can pay anything you want out of the S. I mean, not, yes, because you're an employee, but you have to be the employee. You literally have to be on the payroll. Okay, now they have a new form for it. It's 7206 on the internet. Yeah. Yeah. All right. Any questions?
You're fabulous, Brian. Thank you so much.
Thank you for having me.
Absolutely. I wish I could have been there in person, but it's always wonderful hearing everything you have to say.
Okay.
And I'll see you in, I don't know, what, March 20th.
Yeah. Did you hear that? I said you need to be there by March 20th. And when did she say she was coming in?
March 20th.
Not March 10th, not March.
You always get it done. It's all good.
Okay. And one more thing to say too, is if you don't know what's going on, it's better to come into the accountant before the end of the year if you don't use someone like me, because you can do certain things. We still have 45 days to spend the money to get rid of it. Okay. Just remember that. Or yeah, sure. You have to call my office, say that you had this. I don't have a big schedule. availability because I travel and, ski and stuff like that. but- Mhm.
Thanks,
Excellent.
Brian.
Thank you so
Yep,
much.
thank you. Excellent. They were nice.